In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions, are proposed to be converted into fee.